Will you buy this stock amid lofty valuations? Welcome to my wallet size. Today, we will explore the various alternatives available for trading Nvidia Corporation, which is identified by the ticker symbol NVDA, given its elevated valuations. Nvidia is a leading provider of AI accelerator graphics processing units, GPUs, which play a crucial role in optimizing the performance of advanced language models. These powerful GPUs are instrumental in empowering conversational AI chatbots like ChatGPT and Bard, enabling them to deliver sophisticated and engaging interactions. The CEO and founder of Nvidia has highlighted a significant increase in demand for their products. He emphasizes that the computer industry is currently experiencing two simultaneous transitions: accelerated computing and generative AI. As companies strive to integrate generative AI into their products, services, and business processes, $1 trillion worth of installed global data center infrastructure is expected to shift from general purpose to accelerated computing. Nvidia reported its first quarter earnings on May 24, projecting a second quarter revenue outlook of $11 billion, reflecting an impressive 64% year-over-year growth and 53% sequentially. This forecast sparked a frenzy in the market, leading to an astonishing 24% surge in the stock price on the subsequent trading day. As of June 2, the stock price closed at $393, marking a hefty 29% appreciation since the company reported its first quarter earnings. At one point during this period, Nvidia achieved a market value of $1 trillion, becoming the first semiconductor company to reach this prestigious milestone, driven by the excitement surrounding artificial intelligence. However, the recent exponential increase in the stock price has resulted in lofty valuations. The price-earnings ratio stands at 208 times, and the price-to-sales ratio is 38 times. These high valuations raise questions about the stock's attractiveness as an investment. Considering these factors, it becomes crucial to evaluate whether the stock is still a buy or a sell. To assist investors in navigating the stock market amid the hype surrounding AI, this video will help provide strategies and insights. Brief financial highlights. Quarterly revenue ending April 30, 2023, reached $7.19 billion, up 19% from previous quarter but down 13% year-over-year. The growth in revenue during the first quarter was a result of better performance by its data center when it recorded $4.28 billion, up 14% from a year ago and 18% from the previous quarter. Automotive segment likewise achieved a favorable performance when its revenue was a record $296 million, up 114% from a year earlier and 1% from the previous quarter. Gaming revenue was up 22% from the previous quarter to $2.24 billion but down 38% from a year ago. Nvidia's gaming business is currently facing the repercussions of the COVID-19 pandemic, as consumers gradually reduce their spending on PCs and graphics cards after the initial surge in purchases during the pandemic. Professional visualization saw a rise in sales of 31% from the previous quarter to $295 million but down 53% year-over-year. Nvidia remained profitable with a gross margin of 56.31%, operating margin of 17.37%, and net profit margin of 18.52% for the trailing 12-month period. The company is liquid with $15 billion in cash reserves, accounting for a huge 34% of the firm's total assets of $44 billion as of the end of the first quarter. Bull says. 1. Bank of America suggests that Nvidia stands as one of the primary beneficiaries amidst the intensifying AI competition. Based on the note, it is projected that the market for these chips could expand to $60 billion by 2027, and Nvidia currently holds a commanding share of approximately 75% in the market. 2. Nvidia has established itself as the dominant AI chip maker due to its extensive investments in AI technologies over the years. According to Srini Pajjuri, the managing director at Raymond James, Nvidia's position as the industry leader is unlikely to be challenged in the foreseeable future. Pajjuri emphasizes that Nvidia enjoys a unique advantage as the sole supplier of GPUs, graphics processing units, and their commitment to this market has spanned a decade. In addition to their cutting-edge chips, Nvidia has developed comprehensive systems and software, making it a holistic solutions provider in the field of AI. 3. Nvidia's strategic partnerships with WPP plc, the world's largest advertising group, and MediaTek, a semiconductor company, are poised to unlock opportunities for future growth. These collaborations aim to harness the power of generative AI-enabled content for digital advertising and develop cutting-edge technology for advanced vehicle infotainment systems. Bear says. 1. While Nvidia currently dominates as the sole supplier of GPUs for AI applications among software companies, other semiconductor companies, especially advanced micro devices, AMD, have the potential to develop their own chips that could challenge Nvidia's market share. 2. Big tech companies, such as Microsoft, Google, and Meta, possess the necessary resources to develop their own specialized chips. By doing so, they can tailor the chips to meet their specific requirements while also gaining enhanced control and cost efficiency. 3. In the current macroeconomic environment, big tech companies find themselves unable to offer any financial guidance for the upcoming quarter and beyond. This situation raises concerns about their willingness to postpone the expansion of AI programs until the economy shows signs of improvement. 4. The stock price of Nvidia may have already incorporated all the positive news recently, suggesting that it may have reached its peak and a correction could be imminent. However, there is a strong likelihood that earnings momentum will propel the stock to even higher levels than its current position. Valuation. In this table, it is apparent that Nvidia's stock is experiencing significant valuation expansion, as reflected by its high price to earnings (PE) ratio of 208 times. However, when compared to AMD's PE ratio of 519 times, Nvidia may be perceived as relatively inexpensive. Additionally, other metrics, such as the price-to-sales ratio of 38 times and the price-to-cash flow ratio of 102 times, further indicate that Nvidia's stock is relatively expensive. Moreover, considering Nvidia's fair value estimate of $300 per share in contrast to its current price of $395, it becomes evident that the stock is trading at a 32% premium to its fair value, which can be seen as an indication of its expensive valuation. Chart indicators. From October 13, 2022, to May 24, 2023, Nvidia's stock was on the advancing stage and grew by a robust 156% from $119 per share in October 2022 to $305 on May 24, 2023. After the blowout earnings report together with an optimistic guidance in May 24, the stock skyrocketed by a hefty 24% to $379 per share the following trading day, thereby forming a gap as shown in the stock chart. Since May 25, the stock seems to be consolidating between $365 per share to $419 per share, indicating that the stock is entering the distribution stage. This shows that the market can only go so high because sellers are taking profits, and some are shorting the stock. At this stage, we have traders buying in an uptrend and traders shorting the high prices until it reaches an equilibrium known as distribution stage. For our purpose, since the gap must be filled in, we set the resistance at $419 per share and support of $319 per share, with immediate support at $365 per share. The current price of $395 per share is above the 50-day and 200-day simple moving average, indicating that the stock is bullish and may have more room to run. Likewise, MACD shows a strong momentum upward, also indicating a bullish pattern. However, RSI has already factored in a lot of good news about the stock, resulting to a reading of 74.51, which is already considered high, and therefore overbought. How to trade Nvidia? If you have a long-term investment strategy with a strong conviction in the potential of this stock, coupled with a minimum investment horizon of 5 years, it may be advisable to maintain your current position and consider employing the dollar-cost averaging approach to acquire additional shares. The target price by analyst for Nvidia is from a low of $230 per share to a high of $600 per share for an average of $442. The potential returns for the lowest target price of $230 is negative 42%, while the average price of $442 will yield a projected return of 12%, and finally the high of $600 will have a probable return of 52%. As for the dollar cost averaging, buy the dip during the regular intervals, such as monthly or quarterly, to optimize the yield from the stock. However, if you are a short-term investor, the best action plan is to take profits and re-enter by closely watching the support and resistance levels. If you hold the stock on May 24 at $305 per share, then your capital appreciation has hit a robust 29% for only 9 calendar days. If you plan to re-enter the stock, then your trade may be range bound by buying on the support and sell at resistance. In addition, keep an eye for the breakout or breakdown from the range and trade accordingly. Breakout at $419 is a buying signal, as it indicates resumption of an uptrend coming from distribution stage. However, please take note that the distribution stage takes a while before it breaks out. On the other hand, if it breaks down from immediate support of $365, there is a strong possibility that it may go down further to $319 per share. For those who cannot monitor their stock regularly and think that Nvidia's valuation is overstretched but believe in Nvidia's potential to be driven by artificial intelligence, then one may turn into exchange-traded funds or ETFs. There are some ETFs with heavy investment in Nvidia, particularly ProShares Ultra Semiconductors, USD, with 25.39% allocation, and VanEck Semiconductor ETF, SMH, with 17.51% allotment, among others. We want to emphasize that the strategies mentioned earlier are solely for educational purposes and should not be considered as investment advice. It is essential for everyone to conduct their own due diligence before making any trading decisions, as we are not financial advisors. We sincerely hope that the information provided has been helpful in navigating the Nvidia stock amidst its exponential growth in stock prices. We welcome any comments or feedback on this video presentation. If you find this content useful, we kindly ask you to show your support by liking and subscribing to this channel. Your support is greatly appreciated. Thank you for your time and attention. We look forward to seeing you in the next video.